Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Dan Dolev, Senior FinTech Analyst at Mizuho Americas, to discuss trends in FinTech and the digitization of the economy. Dan, it's great to see you. Welcome to Trade Talks.
Thank you so much for having me.
And you certainly are in the sweet spot. Everything certainly has been focused around FinTech and the acceleration of those trends, certainly as a result of COVID-19. So I want to take a look at card use from 2019 and where we are right now with COVID-19. What did you learn from the Mizuho Consumer Survey?
Sure. So we did a very detailed survey of both online and in-store card use. And what we've learned is that there's been hundreds of basis points of increase over a very short period of time. So you're looking at almost 1,000 basis point increase in e-commerce use in the months of Corona, and slightly south of that for overall card use. So the survey is telling us that there's an enormous adoption of card use, probably multi-year card use adoption within a very short period of time.
And what makes it so interesting is now that we have become accustomed to e-commerce on a more regular basis and the digitization of payments, it probably is a trend that is going to be here. Even if we get on the other side of COVID-19, consumers are just going to adapt more efficient and convenient habits. So let's talk about like a PayPal or Square, what that means for those kinds of payment companies.
Sure. So we call PayPal a perpetual share gainer. And the reason for that is twofold. One, they sit on this e-commerce, basically a pure play e-commerce platform. And as the faster e-commerce grows, and I agree with you, e-commerce is going to grow very, very fast over the next few years, the faster PayPal will grow. But on top of that, PayPal is also gaining shares. So what we found out in our work is that the number of times people actually defer to the PayPal checkout button is growing over time. So PayPal is growing with e-com, but it's also growing even faster because the adoption of the checkout button is getting faster and faster. On the other side of this is Square. Square is more, traditionally more brick and mortar, but they have the Cash App, and the Cash App is basically opening Square into the whole world of banking as a service. So it's not just e-com; it's also people adopting banking as a service and using Square for P2P and other functions that they didn't use before.
Yeah, it's so interesting. My mom loves PayPal. She does everything on PayPal now, which I would not have expected, certainly pre-COVID-19. But let's talk about the processors where they fit.
The processors, you mean Fiserv?
Fiserv, yes.
Yeah, of course. Yeah, the bank processors. There's different kinds, in the ecosystem, there's different kinds of processors. So those companies have traditionally been viewed as sort of, I would say, more steady companies growing at the same rate over time. We think this is going to continue. If you think about the space, there's been two major consolidations last year. One, Fiserv bought First Data, and FIS bought WorldPay. So those are they're not just processors these days. They're basically multifunctional giants, each of those companies, which are processing both bank payments, bank general ledgers, but also doing a lot of merchant acquiring. So they're basically all over the ecosystem, and that's what makes them so powerful, in our view.
Yeah, and to wrap, let's talk about fuel cards. What's the trend there? Because we continue to see adoption of EV.
Yeah, we've done actually some work, and this is a great question. So we've looked at actually 2030. So we've said, let's look really far, 10 years out, and see what would happen to the fuel card companies, WEX and Fleet, even if EV continues to penetrate. We're assuming about 15%, 15% EV penetration in the US over the next 10 years, which is what some of the research that we've read is pointing to. And what we found out is despite the EV penetration, because other services like accounts processing, et cetera, are being incrementally offered by these companies, the overall revenue growth is going to be fairly stable over the next 10 years. So EV is a threat, but it's not a threat that would actually cut the growth substantially for these companies.
All right, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you so much for having me.
You got it, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.